Hello and good morning guys, and welcome to another video. I know you have very less time, so I'll quickly get on to what I'm going to discuss in this video. In this video I'm going to discuss MTP, which has been released for Cost and Management Audit for the attempt June 2019. And guys, MTP is an essential element of your study pattern. Please, now you are at the end of your preparation, so you should be doing your MTPs for not only Cost and Management Audit but all the subjects. Trust me, you can actually find a question worth 5 or 6 marks in your examination as it is derived from the MTPs. So let's get on to the MTP, which has been released for Cost and Management Audit, and as you can see on your screen, this MTP has been released for June 2019 attempt. 100 marks MTP is there, and first question is related to multiple choice questions. And remember one thing very carefully, that 1 marks is for the right answer and 1 marks is for attempting the justification. So justification is to be written for sure. You cannot afford to miss justification. You have to write justification, something or the other, to justify your answer. So your first MCQ is Cost Auditing Standard 102 deals with, tell me, what does 102 stand for, or what does it deal with? Yes, you are right. 102 deals with cost audit documentation. Absolutely correct. And can you quickly tell me which are the other cost auditing standards which is there in our syllabus? Yes sir, 101. Guys, tell me what is 101. 101 is planning. 102 is of course documentation. So you can easily remember these steps of auditing. This is almost like steps of auditing. Guys, what is 103? 103 is objectives and content of audit. Objectives and content or conduct of audit. And what is 104? 104 is knowledge of your client's business. Guys, knowledge of business. So these are the 4 cost auditing standards, and you can easily write them. Obviously, first we plan, then we document what have we planned, then we execute whatever we have planned. Execution means objective and conduct of our audit. Then we should have knowledge of business of the client where we are working. So first answer is cost auditing standard. Guys, answer number 2. Who will give me answer number 2? Compensation paid to employees for past period is past period. Prior period expenses. Of course, prior period expenses are excluded while computing the employee cost. And tell me, which cost or accounting standard are we talking about? We are talking about cost accounting standard 7, employee cost. Alright, perfect. Next, the cost accounting standard 14 deals with, guys, tell me, what does cost or accounting standard 14 deals with? Pollution control cost. Yes, and of course you have to remember the names of all the cost accounting standards. There is no doubt about it. Undoubtedly, I have already taught you that cost accounting standards from 1 to 10 are the most important, and rest you can tell them that they are moderately important, but 1 to 10 are very important. Now comes a very practical question. The figures below are available for Welcome Limited. Welcome Limited has given you certain figures. Budgeted production 1000 units, standard hours per unit 10, actual production 900 units, and actual working 7500 hours. What is the efficiency ratio? First of all, guys, quickly tell me, what do you mean by efficiency ratio? What is the formula of efficiency ratio? I have discussed this thing in detail in my classes as well as video lectures. Efficiency ratio. Guys, what is the formula? So formula is standard hours for actual production. Standard hours for actual production divided by actual hours. This is the formula for efficiency ratio. And guys, if we put this formula in our example which is given, so the standard hours per unit is 10 and actual production is, guys, 900 units. What is the denominator? Please see what is the denominator. It is the actual hours. What are the actual hours which are given? Actual hours are 7500 hours. So in effect you have 9000 hours divided by 7500 hours, which gives you a figure of 120%. So what is the answer of this part? Answer of this part is 120%. Guys, in 1 mark where justification is required, you have to write the formula and the computation in the 1 mark. 1 mark will be for answering the right question answer. Okay, what is the time limit within which cost auditor of the company should submit his report? Tell me, guys, what is the time limit within which he should submit his report? Yes, I know you are very well versed with these number of days, 180 days. But you have to tell me answer of one additional question. 180 days of commencement of the financial year or closure of the financial year. This you have to tell me. 180 days of what? 180 days of commencement of the financial year or 180 days of closure of financial year. The answer is 180 days of closure of financial year. Guys, 180 days from commencement of financial year is the time limit for appointment of auditor, and closure of financial year, 180 days from closure of the financial year is the time limit for submitting the audit report. Perfect. And this is what you have to write in your 1 marks justification also, because 1 marks justification is required. That justification should contain these small points. Let's go ahead. Under generally accepted cost accounting principles, the cost of cane supplied from own farmhouse, we have a farmhouse where we are producing sugar cane, and the cane supplied from own farmhouse is to be treated as what? Guys, it is to be treated as direct material cost. Yes, even if you have self-procured your material cost, then the CAS which deals with material cost clearly says that even if you have self-procured, self-manufactured your raw material cost, then that cost should be included while computing the cost of production. So the answer is direct material cost. Next, cost accounting standard 9. Guys, quickly, cost accounting standard 9s deal with what? Yes, cost accounting standard 9 deals with packing material cost. So what justification should we give in these 1 mark answer? So let us see what justification the examiner expects. Direct material cost, what he expects is, as per GACAP is generally accepted cost accounting principles. Direct material cost includes cost of procurement, freight inwards of the material. Simple. In one line you have to explain whatever you've chosen. Then packing material cost, it has reproduced the same thing which you've just said. CAS 9 deals with principles and methods of classification and measurement of assignment of packing material cost for determination of cost of product. So it's pretty much easy. You have to just write whatever we have the thought process you have to write in 1 mark. That's it. And tell me something, for 1 mark, how much should you write? 1 paragraph, 1 line, 2 line, half line, 2.5 line, 3 line. How much should we write? There is no such justification of how much lengthy should we write. The parameter should be that 1.8 minutes should be spent in writing 1 marks question. Perfect answer. Alright, let's move on. So, dash of Companies Act 2013 deals with internal audit. Guys, do you remember which section deals with internal audit? Section 138. Perfect. So internal audit is dealt with in section 138, and one special feature about this section and why this section is so close to our heart is that internal audit can be done by a CA or CMA, and hence this section is particularly close to all of us because cost accountants are given right under the Companies Act to perform the internal audit. Perfect. Guys, local bodies are divided into 2 parts. What 2 parts are local? How many categories are local bodies divided into? 2 parts. Local bodies are always divided into 2 parts. Guys, what are those 2 parts? Let us see. One is urban local body, which is known as municipality, and second is rural. Second is rural local body, which is known as panchayat. So these are the 2 local bodies which are in existence and which are the classification of local bodies. Next, the first step in audit of educational institution. Guys, you must have read the audit of steps of audit of educational institutions. What is the first step in while auditing educational institute? Read through minutes of meeting, check admission fee, verify annual statement of accounts. The first and foremost step is to study the trust deed or the regulations under which the educational institution is set up. So that is the answer. Alright, let's move on quickly to the next question. Next question is, as per section 143, what is the duty of cost auditor? To report fraud. Tell me guys, what is the responsibility of the cost auditor? And let me give you a hint. Section 143 subsection 12 talks about fraud. So section 143 subsection 12 says that any auditor, whether be it a cost auditor or statutory auditor, should report fraud immediately to the board of directors and audit committee, and then 45 days should be given to the board of directors and audit committee to respond. There can be two situations, whether for situation number one will be that audit committee did not respond, situation number two can be that audit committee responded. In both the situation, the auditor has to report to the central government within next 15 days. So total bracket which is given to the auditor is 60 days. Within 60 days, auditor has to submit a report to the central government. First 45 days is given to the audit committee or the board of directors, and next 15 days, within next 15 days, the report should be submitted to the central government. So this is the hierarchy which is to be followed while dealing with section 143.12. And 143.12 is the section which says that if an auditor of the company in course of performance of his duties has reason to believe that an offence involving fraud is being committed, if fraud is committed, then he shall submit his report on the matters to the central government within such time and as manner prescribed by the statute. And the manner prescribed by statute is that 45 days is to be given to the board of directors or the audit committee, and within next 15 days the report should be submitted to the central government, and entire onus is on the auditor to perform these two activities. Yes sir, perfect, we now remember. And one important thing guys, section 13 specifies that if you have contravened this section, then you should be penalized and you should be reprimanded against. And subsection 14 says that the provision of subsection 12 should be applicable to the cost audit under section 148 as well. So it is very clear that cost auditor has to also follow this regulation 143.12, and a normal statutory auditor has to also follow the regulation. Then subsection 15 says that cost accountant, company secretary practice do not comply. Then there is a punishment section which is subsection 15, which says that 1 lakh rupees is the maximum punishment which is to be given to cost auditor or the company secretary if he fails to 1 lakh is the minimum penalty, and the maximum penalty is 25 lakhs which is to be paid by the cost auditor or the company secretary. And what should be detailed out, what disclosures should be made in the board report if fraud has occurred, and if the fraud is being inspected with. Nature of fraud, approximate amount involved, parties involved, and remedial action taken. So auditor should make sure that board's report contain all these elements about the fraud if the fraud has been committed by within a company. Now comes on to a very important aspect of our paper guys. This question repeatedly is asked in the examination. It is a question of reconciliation statement between financial and costing records. It is very important to understand this concept by all of you. So let's start. The cost accountant of Trimcus Textile Limited has arrived at a profit of 2,10,000 based on cost accounting records. Okay, costing profit is 2,10,000 for the year ended 31st March 2018, and as per the financial accounts, as per the financial records, the profit is 22,14,000. Now the question arises, sir, should we take costing profit first, should we take financial profit first, or it's okay to take either of them? What is the answer to this question? Should we take costing profit first, should we take financial profit first, or we can take either of them? Guys, answer is very clear. The annexures to cost audit report clearly states a format in which profit reconciliation statement should be prepared, and according to that format, costing profit is to be taken in the first place. You cannot start your question with financial profit, although question will not be wrong, and if you see the answer in this RTP, MTP also, the answer will start with financial profit. So answer is not wrong, but my preference would always be take costing profit first and financial profit should be the residuary figure. Anyways, so in this question, MTP has taken financial profit as the base, so they have taken financial accounts profit 22 lakh as the base. So we'll accordingly solve our answer. That's not a problem. But remember, in practical life, in real life, you have to take costing profits first. Okay, let's start quickly. Profit on sale of fixed asset. So there is a profit which has been accrued by the company on fixed asset. This profit will be there in the financial profit. Yes. So financial profit will be high and costing profit will be less. And since we have taken financial profit as the base, we will reduce financial profit to come at the costing profit. So let's quickly see the answer. So what we've done is we've reduced the loss on fixed assets. Perfect. So we have reduced the profit on sale of fixed assets from our financial profit. Yes. So next treatment, next adjustment is loss on sale of investment. Guys, there is a loss which has happened on sale of investment, and this loss would have been deducted while computing financial profit. So this will be added to financial profit to arrive at the figure of costing profit naturally. So we have added this figure to financial profit. Next, voluntary retirement compensation included in salaries and wages in financial account. It seems that financial account contains an expense called voluntary retirement. However, cost accounts do not contain such expenditure. So to equate the financial profit, so financial profit will be less, costing profit will be high, because financial profit would have an expenditure element. So to equate both of these, we have to add in the financial profit. So the adjustment will be of adding the VRS amount in the financial profit. We have added VRS amount in the financial profit. Next, we have donation paid. Donation paid has been reduced from financial profit, so financial profit would be less. So we have to add donation paid to financial profit. Perfect. Next adjustment is insurance claim related to previous year received during the year. So previous year there was an insurance claim which has been received during the current year. So obviously your financial profit will be high. Such insurance claim would not be appearing in the costing profit. So costing profit is less. So tell me, add or less? Less. So financial profit will reduce the receipt from insurance claim. Perfect. 5,08,000. Next, the profit from retail trading activity. There is a profit which has accrued from retail trading activity, and there is an income which has arisen from intercorporate deposit. There is income in financial profit. So financial profit will be more, costing profit will be less. So tell me, add or less? Less. So we'll reduce profit from retail trading activity, will reduce interest on intercorporate deposit. Now last adjustment, and a very very important adjustment, guys, decrease in value of closing work in progress. Closing work in progress has reduced, and finished goods inventory has also reduced. Now understand, what do you mean by decrease in closing work in progress? This means that opening work in progress was more, closing work in progress is less. Opening work in progress is more, closing work in progress is less. Similarly, opening finished good is more, closing finished good is less. Opening finished goods or opening stock is in the nature of expenditure, and closing is in the nature of income. So if opening is more and closing is less, then net of effect of both of these will be an expenditure, because opening is expenditure, closing is income. So both of these net off will be expenditure, because there is a decrease, which means that opening was more and closing is less. So net effect will be of an expenditure. So if I can rephrase this adjustment, in other words, I'll say that expenditure as per financial accounts is 3,82,000. Expenditure as per cost accounts is 3,90,000. So expenditure as per financial accounts is 3,82,000, which means that financial profit would have been more and costing profit would have been less, because in costing profit there is additional expenditure. So what do we do to equate both of them? We have to reduce the differential in financial profit. So what we have done is, we have reduced the differential. The differential amount has been reduced in financial profit to arrive at the figure of costing profit, and hereby we arrive at the costing profit figure. So guys, this question is like uncompromisable. We cannot compromise on this question, because this question is repeatedly asked in the examination. Please practice all the questions which are given in my module also relating to profit reconciliation. We'll quickly come on to the next question, question number 3, A part, which is on calculation of inventory turnover ratio, return on net worth, ROI, ROE, profitability ratio, and we have to give brief comments. 1 plus 1 plus 1 plus 2 plus 3 plus 2. This is the scoring of this particular question. So guys, very simple question. This is relating to normal ratio analysis, which we have done in our 11th standard and continuing till date. This ratio analysis is an essential part of annexures to cost audit report. While drafting the cost audit report, we are feeding in some profit analysis, so that we are given some analysis, we give some analysis to the company, and this relates to that, and it's very basic. Right, so we'll start with inventory turnover ratio. Formalize cost of goods sold divided by average inventory. Guys, very simple. We have simply taken cost of goods sold and we have divided by average inventory. Average inventory is opening plus closing divided by 2. So it's pretty simple. Now comes on to an important point which I would like to discuss with all of you. Guys, net worth. What do you mean by net worth? Net worth means shareholders' equity. And one thing which is to be seen here is that net worth is always computed at the end of the financial year. It is never an average. So net worth is computed at the end of the financial year, which is 2972, and we have taken profit after tax, which is 40 rupees. 40 divided by 2972. Return on net worth is the ratio which we are trying to compute. Next ratio which we are trying to compute is return on investment. Now comes the point where we will be taking total investment by the shareholders and the debenture or the debt holders, and we divide by their return. So in this case, the profit which is to be used is not profit after tax, it is net profit before interest but after tax. Makes a lot of sense. Debentures, when you are including debentures in the denominator, then you have to include the income which is arisen on debentures or the debt in the numerator as well. And therefore, the numerator says net profit before interest, this is the most important part, before interest but after tax, divided by average. Guys, just correct it. This should not be average shareholders funds, but this should be average capital employed, which should include two things. One is equity shareholders funds and second is debt. So it should be a culmination of both of them. So net profit before interest is 256 plus 40. So 256 is the interest expense and 40 is the profit after tax. So we've just added 256 and 40 to arrive at the net profit before interest and tax. And average capital employed is pretty simple. We have taken total capital employed, opening plus closing, divided by 2, and hence we have arrived at the capital employed. So the thing which is to be kept in mind is return on investment is return on total investment. Return on net worth is return only and only on equity share capital, and accordingly the numerator will change. In return on net worth, numerator will be targeted to the equity shareholders. In return on investment, the numerator will be targeted to both in equity and debt holders. Next will be the profitability ratio, guys. Profitability ratio are to be computed. There are two profitability ratios which are to be computed. One is gross profit ratio, second is net profit ratio. Gross profit ratio formula is pretty simple. Gross profit divided by sales. And operating profit ratio. Operating profit is profits which are derived from operations, which means we have taken the PBT, which is 256. We have taken the PBT and we have added the PBT, which is 68, and we have added interest element in that PBT. So this is the operating profit ratio, 256 plus 68. 256 plus 68. 256 plus 68 to compute the operating profit, and denominator will be as usual, it will be the sales figure which we have taken in our computation. Next will be net profit ratio, guys. Net profit is profit after tax divided by sales, which is 40 divided by 26718. Now simple comment which you have to write is just compare the profit of earlier year with the current year, and then just tell the examiner whether it has increased or decreased. This is the simple comment which you have to give while analyzing this particular ratio. So this is the comment which you can easily read and do it yourself. It is pretty much simple and straightforward. I am getting on to part B of question number 3. Part B relates with normal price definition. So guys, if you have seen CRA1, then it asks you to give normal price of your expenditure as well. And normal price is what? Normal price is the you've studied transfer pricing in your income tax. That transfer pricing has a normal price or the arm's length price. That price is the uncontrolled price which has been computed on the basis of uncomparable, uncontrolled transactions which are existing in the market. So there are 5 methods which are used to compute the transfer pricing method, and those 5 methods are to be used while computing normal price as well. So definition of normal price is: normal price means price charged for comparable and similar goods in ordinary course of trade and commerce, where price charged is sole consideration for sale and sale is not made to related party. So if the sale is made to related party, then you will compare the actual price with the normal price, and this comparison will lead to a difference. This is the concept of normal price. So normal price, you have to write the definition, then depending upon the number of marks and the time available, you can write the methods which are there to compute the normal price. These are the methods which are there to compute the normal price. So the next question is question number 4. And question number 4 deals with XBRL, guys, extensible business reporting language, in which we have to report our cost audit reports. So I hope you've done this aspect pretty well. So I'm not going into detail of this aspect XBRL. You have to determine the steps which are there in the XBRL process. So 4A is related to XBRL. Next is a question on standard material mix and variances. And we have done simple variances in our subject, guys. We have not done, and there are not in our course, the complex variances like material quality variance and such variance. This is not there in our syllabus, although still let us quickly go through what is this question and how will it be solved if it comes in the examination. Standard material requirement to produce 1000 units of product X is 1200 units. So to produce 1000 units of product X, you need 1200 units of material, and the standard price is rupees 60 per unit. The standard allows for reject of 25% of the input. 25% of the input is rejected. This we are studying the standard details. It is estimated that 1/3 of the rejects can be reworked at an additional cost of rupees 20 per unit. The scrap units sold at rupees 5 per unit. During the particular period, units produced were 19,500 with 24,000 units of material at standard cost of rupees 60 per unit. So please note that price does not change. Then 7,000 units were rejected, out of which 2,500 units were reworked at cost of rupees 51,000. The balance unit were sold as scrap for rupees 5 per unit. Calculate material quality variance. Guys, this is a special kind of variance which is calculated, material quality variance. Then it has further sublimbs like material usage variance and scrap variance. So quickly let me tell you how to solve this question. Although remote possibility, guys, that this question can come in the examination, but still there's no harm in doing it. Alright, so first of all I am going to write the standard material cost data, and the output which we are projecting is 1000 units. 1000 units is the output which we are projecting for this particular entity. So we write particulars units amount. Okay, particulars. First of all, we'll see what is the raw material which we need to use for this particular production process. Guys, the raw material which we need to use is 1200 units. It will be produced at the rate of 60 per unit. So the total quantity, total amount which is there is 72,000 units. Over and above this particular amount, guys, there is a reject. So there are certain rejects which are there. Rejects are at the rate of 25%. 25% of 1200 means 300. So we are actually left with 900 material. So we are actually left with 900 units at the rate of rupees 72,000. Now let me tell you that some rejects are reintroduced as rework. Some rejects are reintroduced as rework, and the quantity will be 100 units. Why 100 units? Because the rejects, 1/3 of the rejects are reintroduced as rework. So 1/3 will be added as reworks to our cost of production. Now at what rate will these 100 units be reworked? The rate will be rupees 20 per unit. Question says that the rate should be 20 per unit, so 2000 rupees will be our expenditure. So we have 1000 units at the rate of 74,000 rupees. Now there is some scrap which is generated in this entire process. Guys, the scrap is the residual value of what has been rejected minus what has been reworked. So the scrap is 200 at the rate of rupees 5 each. So 1000 rupees will be deducted while computing the scrap. 1000 and 7300. Sir, you made a mistake. You've written 1000 over here. However, sir, this should not be 1000. This should be 800. No guys, you are absolutely wrong. It should not be 800, it should be 1000 only, because remember we have already reduced the rejects in which 200 is already there. So although I am writing 200 over here, but it has already been reduced while computing the unit, so it will not be reduced again. So the number of units will be 1000 units only, and 73 should be the cost of these units. Now if I compute the per unit cost, then the per unit cost will be rupees 73. How is rupees 73 computed, guys? 7300 divided by 1000. So 73,000. Okay, 73,000 divided by 1000. So this is the per unit cost which we have computed for our product. Okay, so guys, we have computed the standard cost which should have been incurred for this production process. Now we will be computing the actual material cost which should be incurred, which is actually incurred in this entire process. And the actual material cost is computed for 19,500 units. That is the production which we have done during the particular period which is given in the question. Now we have to compute the actual cost which has been incurred by the company. Actual cost will again be computed in the similar fashion. Raw material cost, guys, actual raw material cost which has been incurred is for 24,000 units. Yes, question says that 24,000 units, and the price remains the same, rupees 60 per unit. So this comes out to 14,40,000 units which has been incurred for raw material cost. Now the rejects out of this entire input should actually be 25%. However, actually it is not 25%, it is 7,000. So the question is telling us that we have deviated from the standard, and the actual rejects amounts to actual rejects is 7,000 units. Okay, sir. So 17,000 remains with us at the cost of 14,40,000. This is the ratio which remains with us. Now there is some amount of rework which we can add here, and the rework should ideally be 1/3 of the reject. However, again in this question the actual rework is something different, 2,500. And tell me, what is the price at which the rework should be should incur the expenditure? It is 20 per unit. So ideally it should be 50,000. However, the question says that it is 51,000. The rework is not equal to what should be there, but it is actually 51,000. So the total amount which is there with us is 14,91,000 which we have spent till date, and for this amount we have produced only 19,500 units. Now I am going to reduce some actual rejects which have been turned into scrap. So guys, the question says that the scrap amount, scrap units are sold, and the scrap units are 2,500 are reworked at the cost of 51,000. Balance units were sold as scrap. The balance units are sold as scrap. So we have rejected 7,000, guys. 2,500 is reworked, so the balance amount which is sold is 4,500. Now ideally we should have sold it again for rupees 5 per unit, which we have done, and the amount of realization is 22,500. So this remains 19,500. So again we are not able to understand why didn't you subtract these two amounts? Guys, very simple. These two amounts are not to be subtracted because 19,500 is the amount, is the units which already reduces the 4,500. So we will not reduce 4,500 again. Perfect. So the total amount which is computed is 14,68,000. Now if you compute the per unit cost, then what should it be? Let's see. The per unit cost should be 14,68,000 divided by 19,500, and it should give you a approximate figure of rupees 75.28. So this is the per unit cost which has been computed by us in the question. The next part is, guys, we are going to compute the actual cost as per the standard values. So we need to compute the actual material cost on the standard values. So if we had followed the standard practices, then what should have been our record? This is computed by this particular aspect. Let's compute units and amounts. So guys, we'll be taking 19,500 units as the output which we should have produced. For producing this particular output, we should have used raw material to the tune of 120%. Where does 120% come from? Guys, 120% comes from the standard input output ratio. Standard input output ratio was 120 is to thousands. 1000 units of output required to 1200 units of input. So for producing 19,500 units of output, how many units of input was to be fetched? It is 23,400, and it will be calculated at the rate of 60% itself. So the amount you will derive is 14,04,000. Now in this we need to reduce the rejects which are there. Again guys, the actual rejects are 7,000. However, I am not going to take 7,000 because the standard rejects was 25%. So 25% of 23,400 comes out to 5850. After reducing this reject amount, I am left with 17,550 amount of units, and the cost will be 14,04,000 units. Now guys, out of the rejects there are some reworks which are reintroduced in the production process, and for introducing these reworks we have incurred an expenditure of rupees 20 per unit. So rework should be 1/3 of the rejects. This is the standard which we have been following. Now 1/3 of 5850 will come out to be 1950. So the net balance which is available with us is 19,500, and the amount which is available with us is 14,43,000. Perfect, sir. So now we will reduce some scrap which has been left over by the company, and the scrap will be at the rate of total reject. So the amount which has been rejected, which is this amount minus this amount, should be the scrap. So at the rate of 5 we need to reduce the scrap. We'll sell the scrap at the rate of 5. And what is the quantity? Quantity is 5850 minus 1950. So guys, the quantity comes out to be 3900, and the amount of realization which is expected is 19,500. Now again, so that confusion is not there, I am going to cross this amount because this is not to be reduced while computing the ultimate units, 19,500 units, and the amount which is calculated is 14,23,500. Now this is a simple process which we use to turn our actual numbers into the numbers which are taken on actual basis but are on standard values. This is the method which we have taken. Now we can simply compute the material quality variance. Material quality variance is computed by reducing two amounts, guys. One amount is the actual cost which has been incurred minus the actual cost at standard prices which has been incurred. If we reduce both these amounts, if we subtract these two amounts, then it will give us the material quality variance. The name is material quality variance. So the actual amount which was computed was 14,68,000. Please turn on to the working note, first working note which we have given. 14,68,500 is the first actual amount which we have been computing. Then it comes the amount of 14,23,500. 14,23,500. This is the amount on standard basis. So the variance is of 45,000. Now guys, you have to tell me whether this variance is favorable or unfavorable. It is favorable or adverse. Yes, this variance is adverse. How do we say so? Guys, actual expenditure is more than the standard expenditure, therefore this variance is adverse variance. Now I will bifurcate this variance into three parts. First is the usage variance. Let me tell you that in this question price variance will not come because price remains 60 irrespective of number of units. So price variance will not come. So sir, what will be the other two variances? Other two variances will be scrap variance and rework variance. Rework variance is the next kind of variance. So these three variants will accumulate to form the material quality variance, which is the main head. Okay, usage variance. Please tell me the formula quickly. Sir, actual quantity minus standard quantity, minus standard quantity multiplied by standard rate is the formula for usage variance. Absolutely perfect. 24,000 was actually bought by us. However, we should have bought 23,400. We should have bought it at the rate of rupees 60. So 36,000 is the adverse usage variance which we are expecting. Perfect. What will be the scrap variance? Scrap variance should be actual quantity or actual scrap which was there. Actual scrap minus standard scrap. What is the actual scrap, guys? Actual scrap we have computed in our last part. 22,500 was the actual scrap. What is the standard scrap? Guys, standard scrap is 19,500. So we'll reduce both of them. We get a 3,000 variance. Now you have to tell me whether this variance is an adverse variance or a favorable variance. Yes, you are right. This variance is favorable variance because scrap is in the nature of income, and income is more in actual terms and is less in standard terms. Therefore, this is a favorable variance. Last, rework variance. You have to tell me the actual rework minus the standard rework. Guys, the standard rework cost is 39,000. So the standard rework cost is 39,000 and the actual rework cost is 51,000. So 51,000 minus 39,000, 12,000 is the adverse variance which we can say is the rework variance. So if you add 36,000, 12,000 and deduct 3,000, you will get the figure of 45,000. These three will accumulate to form 45,000. So yes, I know that this question might not come in the examination, but still there's no harm in at least trying, guys. So I tried and complete this question for all of you so that you are able to just grasp what is the concept. So guys, the next question which we are going to take is again of the MTP itself. Write short note on corporate development audit. I hope that you have done those three chapters which are there in the syllabus for theory, and this question comes from those three chapters. Guys, there's one additional chapter which has been introduced this time, which is the chapter on documentation, and that is an important chapter for all of you. You should do that chapter thoroughly. So what is corporate development audit? Corporate development audit is an analysis of how our company is developing and growing. So to audit the strengths and weaknesses of the company and how are they growing is the corporate development audit. So I understand I'll highlight some important words which are there in this definition which you should learn. So strengths and weaknesses. Then the auditor has to assess the development effectiveness and highlight the development needs. Where are the where is there is a need for development, auditor has to highlight those areas. Okay, let's move on to the next aspect. What is productivity audit? Productivity audit is basically analysis of productivity of resources deployed, or what kind of resources are deployed. Guys, it can be money, men, machine, material and methods. So analysis of how well your money, men, machine and material are working. This is productivity audit. What is internal audit? Very, very important, guys. A question repeatedly is asked from internal audit. So you should know the relevant law, section of the Companies Act and the limits of internal audit for your examination. It is very, very important. Internal audit. What is internal audit? It is an independent and objective assurance consulting activity designed to add value and to improve organizational operations. One very, very important word which you need to underline is risk management and control. These are the two things which internal auditor specifically check. It checks whether the risk management policies are in place, and it checks whether the controls, internal controls are in place. Necessity of internal audit, this of course you can do well. Role of CMA in internal audit, guys, as we have studied that the law itself now states that the CMAs can do internal audit of a company. So the role of CMAs in internal audit has gained more importance as before. So the most important paragraph in this entire answer is this, that the auditor, the CMA, has the adequate qualification with respect to analysis of operational efficiency, productivity and profitability wastages. Then they can apply this on the resources of the management and assess the effectiveness of the business. So again, remember that there is no benchmark of how much long should the question be. Answer should be contained in the number of minutes which you have allocated to that particular question. Next comes this waste multiplier, guys. I already have a video on my channel which is there on waste multiplier. I have analyzed this entire concept and made you understand this entire concept in another video. You can check out that video if you want to see it. I'll also give a link on the description box. This is a very important aspect. Undoubtedly, for every second attempt, waste multiplier is coming in the examination. You cannot miss to revise waste multiplier. Question of abnormal cost, CAS 1, Cost Accounting Standard 1, abnormal cost, whereby we analyze the amount which is the abnormal cost, and I will give a brief, very brief analysis of this particular question. So guys, 13th September is when the strike had started, 16th November is when the strike had ended, but the normal period could effectively begin on 5th December 2017. So I term this period as A, this period as B, this period as C and this period as D. So now our endeavor would be to compute the cost which has been incurred in period B and C, and this will be termed as the abnormal cost. Guys, one very important thing, that the cost of period period B is already given in the question. 13 September to 16 November, that cost is already given. So B period cost is accumulation of these three amounts, 105 plus 90 plus 135. This is the period B abnormal cost. Now the only challenge which you need to take is, what is the period C cost? Period C cost will be total cost minus period B cost minus variable cost, and the only variable cost which is there in this question is 180. So you need to reduce 180 to compute the period C cost. So sir, why this is also, sir, variable cost? 450 is also variable cost? Guys, yes, 450 is variable cost. However, during this period, during period of your non-strike time, your direct material cost would have been paid. The salaries to the direct labor would have been given, and therefore this cost was incurred during period C, and therefore we are not deducting this cost from our computation. So only variable cost which is deducted is the power and not anything else. So this will give you a total cost which has been incurred during period A, period C and period D. Then what you have to do is you have to divide this entire period cost by the number of days which are there in A, C and D, and multiply it by the number of days which are there in C, and on a pro rata basis you have to compute the question. I am not solving this question over here because I am sure that you would have already done this question, and it is a pretty simple one. It is not a difficult one. Alright, then comes simple theory part, guys. Valuation of value chain system. Value chain is the chain activities, like starting from the production line to the wholesalers, to the retailers, to the consumer. How do you think your product will move? This is known as value chain analysis, and this analysis is done for analyzing the performance of the company. So 4 marks question, briefly you have to state the value chain activity. Role of management with regard to internal control, guys. Management is responsible for designing and maintaining the internal control. These are the two things which management has to do for internal control. So you have to write designing and maintaining of internal controls. Of course, it's a 4 marks question, so you have to write more. Briefly state the disclosure and transparency requirement for corporate governance. Corporate governance is a point which we have discussed in depth in our classes and the notes. So I have to write the points. And management audit and internal audit. Difference between management audit and internal audit, guys, to state it briefly. The managerial decisions are analyzed in management audit, and in internal audit, internal controls and risk policies are analyzed. So these are the difference between management audit and internal audit. Write a short note on profitability analysis. What do you mean by profitability analysis and how do you do profitability analysis? We have just done a question of doing profitability analysis. We use certain ratios like GP ratio, net profit ratio and operating profit ratio to do the profitability analysis, which is to be given in this answer. So profitability analysis part D is where this is to be disclosed. So yes, this finishes our quick revision on MTP. I know it was not quick, but it required this kind of discussion, guys, and I hope you guys are really going to benefit from this MTP. Please don't take stress now. Now ending day is there. Don't take stress. Just revise as much as possible. Don't take stress that I'm not able to recall anything, sir. I'm not able to remind, my mind is not able to recapitulate what we've done in past. Don't worry about any such stuff. Everything will be done fine. All the very best and happy study.